Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 25th of June, 2021. Right, everyone, let's get into it. So, just another reminder here that I'll be doing an AMA in the Daily Gwei's Discord channel tomorrow. So, if you are around for that, do join. It's at 11 p.m. Australian Eastern Standard Time, or morning in the US, or afternoon in Europe here. So, if you've got any questions that you want to ask and you can't attend, please go into the Discord channel and ask them in the AMA series channel, and I'll answer them live on the AMA. And of course, the AMA is going to be recorded and uploaded to YouTube on, I think, Sunday. So it'll be the day after I do the AMA. So yeah, looking forward to seeing as many of you there as can attend. If not, I'm looking forward to answering your questions. Definitely just put them in the AMA series channel in the Discord server. So Jordan Frankfurt from Uniswap posted a teaser picture today saying, "You're ready to go fast." And this image is just an image of Uniswap on Arbitrum. So you can see here there's a little, description box here that says, "This is an alpha release of Uniswap on the Arbitrum network. You must bridge L1 assets to the network to swap them." And it's got a nice little deposit to Arbitrum button here. And you can see in the top right, it tells you that you're on the Arbitrum L2 alpha, which is really, really, really cool to see. I mean, that means that this is coming really soon. I think people have been asking in the Discord server, it's well, when's kind of Arbitrum going live for the public? I haven't heard anything lately on this, but in all honesty, I would suspect 1 to 2 weeks from now. It could even happen maybe even this week. Who knows? Or it could happen next week, a sort of thing. Or it could happen later, of course. I don't have any special knowledge here. I'm just kind of assuming. But it's funny because if Optimism still launches in July, then we have those two major platforms going live within a month of each other, basically, which I think is really cool. And I've spoken about the other layer twos way too much at this point, so I won't touch on those. But still, this is just this simple image like this gets me hyped. Just the fact that I've been talking about this for so long. You guys have been hearing me talk about this for so long, and and it's been such a long time coming. To finally actually see just a UI for it is pretty cool. And I think that when people see this and say, okay, well, what's this Arbitrum thing, and they'll go and they'll deposit their assets in, and they'll be experiencing these low transaction fees while inheriting Ethereum security, they're going to be really excited, I believe, about this. And I think I've said this before on the Refuel, but I really do believe layer twos on Ethereum are going to completely change the narratives around Ethereum, around the narrative that Ethereum can't scale, or Ethereum transaction fees are high, so I'm going to use another chain or whatever. I think it's really going to change that. And I think, even scalability solutions like Polygon have worked to change that as well. That kind of narrative around Ethereum. So I'm just really, really excited for these things to go live. The more scalability solutions, the better at the end of the day. I think that end users are going, most end users, I wouldn't say that most end users don't care about decentralization, but it's a priority thing, right? The priority for them is cheap transactions, and cheap, reliable, fast transactions. That is the top of the list, and that's fine. I totally get that. But I would wager that if you ask them, what would they prefer? Would they prefer a decentralized and secure system, or would they prefer something where there's a high risk of losing their funds? Well, of course they're going to say they prefer the decentralized system. And it's funny because you can actually use analogies here. You can say to someone, okay, would you rather keep your money in under your mattress, your life savings? Would you rather keep it under your mattress, or would you rather keep it in a vault? Not even in a bank, a vault, or maybe in a safe. Even the simplest example, would you rather keep your money in a safe that's bolted to the ground in your garage, or would you rather keep it under your mattress? Well, of course, you're going to pick the safe every time. Yes, it's still in your house. Yes, there are ways to get that safe out, even though it's bolted down, but it's the better option than just leaving it, the much better option than just leaving it under your mattress. And, obviously most people put their money into a bank because that's the best option in terms of security, and you've really only got the one counterparty risk there, and that's the bank. But you've also got the government as a counterparty risk if they freeze your funds or whatever. Whereas with Ethereum, it's well, would you trust the Ethereum network to secure your funds and these layer twos, or would you trust BSC, for example? I know I would never trust BSC ever to secure my funds. I trust Ethereum wholeheartedly. So when I kind of present that analogy to people, they kind of get it. So I think when people say, do end users actually care about decentralization? That is definitely the wrong question. I think the right question is, do they care about security? Because security is derived from decentralization in this ecosystem, and everyone cares about security when presented with, I guess, that kind of like analogy or those comparisons when it's actually put in front of them. Because no one, I mean, I'm talking rational people. Like there are some irrational people out there who, and some people just say stupid things, but like just a rational human being will answer the question the same way every time. Like, yes, of course, they're going to prefer security of their money. They're not going to prefer just leaving their money somewhere where there's a high chance of it getting stolen or kind of getting rugged or whatever. So yeah, but anyway, really excited to see this. I'm hoping this is a signal that Arbitrum is going live with a public mainnet, very, very soon. So we'll see how that kind of plays out there. So DCInvestor put out a really interesting tweet thread today where he basically went through how proof of stake is going to dramatically shift incentives around Ethereum development and the future of ETH as an asset. Now, you can, of course, go read this Twitter thread in the YouTube description. It'll be linked there. But what I wanted to kind of go over was essentially the main point that DCInvestor was making here, and that's about shifting incentives. Now, what he means by this is that under the current system with proof of work, the miners are not necessarily aligned with the goals of the Ethereum network. A lot of, and I've said this before, where a lot of miners are actually just like, it's a business for them at the end of the day. They will mine anything as long as it's the most profitable. And, right now, Ethereum is the most profitable thing to mine with, graphics cards or ASICs that are built for that hash function that Ethereum uses. So people mine that. But if something else came along, another network came along, most miners would probably just switch over to that if it was more profitable to do so. We see this play out all the time. It's not just with Ethereum, it's with pretty much every proof of work based system. Whereas with staking, with proof of stake, there's a much bigger overlap between users and validators and stakers. And at the same time, you can't use your ETH to stake on another chain. You can only stake on the Ethereum chain or a fork of the Ethereum chain. Now, to stake on a fork of the Ethereum chain, you would need to essentially convince the majority to fork off with you. So it would be kind of like a different kind of thing there. So you're much more aligned in just like staking on the canonical Ethereum chain and continuing that along, and staking. A lot of stakers are ETH holders, right? I mean, all stakers are ETH holders, but like traditionally, the stakers that are kind of involved now have been ETH holders for a while. They've been stacking ETH for a while. They haven't had to dump it to cover costs like what miners do, and they've also been heavy users of the Ethereum network too. So those incentives, that incentive shift there, is absolutely massive. But DCInvestor's kind of tweet thread here focuses on Ethereum development specifically, and how developers of both apps and core developers are going to be more aligned with the Ethereum network because they are going to obviously be holding ETH and they'll have a chance to stake it as well. Because with mining, I guess like it's a full like operation. It's basically you have to get hardware. You have to set up hardware in somewhere. Like if you're doing it in your house, then you've got like so much noise and heat. You have to consider electricity costs. You have to consider so many different things. Whereas with staking, it's very, very simple. Like you just you have some ETH, right? If you have the 32 ETH minimum, then you can stake on your own. You build yourself a little staking box, or you buy some pre-built hardware, set it up in your home, and away you go. It's not going to cause any excess heat or noise. It'll marginally increase your electricity bill, but not really. And then there you are. You're a staker, and then while you're a staker, you're an ETH holder as well. So you are incentivized to increase the value of ETH because that increases the value of your stake. So I think that there is a very underestimated point about proof of stake, and I think that's just another elegant thing that proof of stake has, because a lot of people will argue like proof of stake versus proof of work, which one's better. I again think that's the wrong question to ask about what's better, because it's a very subjective thing. And it's very hard to get an objective answer to that question. I think the right answer is like which one aligns incentives more. Is it proof of stake or proof of work? And I think proof of stake aligns incentives much more between all of the participants of a network and all of the community members of that network, because of the fact that the majority of the community in Ethereum holds ETH, right? Like, and the minority is basically the miners who may just like I guess like mine the ETH and have to sell a lot of it to cover costs, and they just view it as a business. It's not really something that they're aligned with. I'm not saying this applies to every miner, but I think it applies to a lot of them. So yeah, there's much more of an overlap under proof of stake. But anyway, I suggest going and reading this whole thread from DCInvestor. He's got a great way of articulating himself and putting and articulating kind of these topics that you may not have thought about very often. And then there was a lot of comments as well that went through some other benefits here. So definitely go read those as well. So Peter from the Geth team put out 2 tweets. So I said yesterday, I think I mentioned yesterday that Peter put out a tweet saying that he wants people to basically spam the Ropsten testnet to test 1559, to break it if they can, and to just make sure it's all working fine and dandy. So you can see the results of this stress test here. There was basically a very fast spike in the base fee being paid. So people were paying like ridiculous amounts of fees on Ropsten to test, the fee burnout, to test 1559 out in general. And then you can see back here, here's the burn per block counterpart, maxing out at 768 ETH for the most expensive block in terms of like burn. So yeah, I mean the network got pretty stress tested yesterday. I think this is going to continue. Obviously on Ropsten, on Gurley, and then Rinkeby, the other test nets. And then, on mainnet, we can't really do this because it's real ETH and it's real economic value. But so we do these on the test nets. And I actually had a question today from the Discord channel. Someone asked, why do we have to deploy it to the other 2 test nets if they're the same as kind of like Ropsten? And it's like, well, I mean, yes, they, as far as I know, they are the same. But at the same time, you want to deploy to more than one test net because you want to make sure that the behavior that you expect is uniform across those 3 test nets before you put it onto mainnet. Because say you put it onto Ropsten and then it's going all well and dandy, but then you put it onto mainnet and something breaks, and it only broke because the mainnet environment is, even though it's the same kind of like code and everything and same kind of system, it's a different environment to the testnet, and each testnet is a different environment to each other as well because different developers use different testnets. So Ropsten is different to Gurley, and Gurley is different to Rinkeby. So that's why we want to do multiple testnet deployments. And if all goes well on those 3 test nets, that's when, you can have relative confidence that we should be able to deploy the 1559 or whatever EIP it is, whatever, I guess, upgrade it is, because it's not just 1559, it's London with all the EIPs in it. We could have relative confidence of deploying that to mainnet there. So yeah, if you're, someone who feels like you can stress test Ropsten or any of the test nets, please do so. Definitely give it a whirl. Try and break something. If you can break something, it would be both good and bad. Good because, good that you caught, the bug or whatever, and that you broke something and that needs to be fixed. Bad because I would suspect that would delay 1559 until probably late August if something broke on the test nets. But so far, it's going smooth. I spoke about the watchtheburn.com website yesterday, which you can go check out as well to see how much ETH is being burned. But that's on Ropsten. It's not real ETH just yet. And as I said, the network is being spammed, so it's not going to be representative of mainnet at all because people were spamming the Ropsten network with ridiculously high ETH fees, which are just completely uneconomical on mainnet. So speaking of 1559, James Hancock had a go at redesigning a mockup. He designed a mockup rethinking the wallet UI based on 1559 principles. So you can see here that the slider is essentially the only things users would need to decide, what transaction they want to pay. So essentially, the minimum is the base fee plus the average priority fee plus 1 Gwei, which it should still get you in relatively soon into kind of like a block, but it's going to be slower than the comfy setting here, which is essentially the base fee times 112.5% plus the average priority fee, which is going to get you into the next block 95% of the time, which is, the comfy mode is what most users are going to be selecting all the time. And then you can do the 3 times the base, 3 times equals base fee times 3. And it's good for the next 10 blocks under any conditions. So essentially, I think the ones that are going to be paying these kind of 3 times base fees or whatever are going to be the layer 2s. Because if they need to get their proofs into a block, they want to make sure that they get in, and they don't want to kind of play the risk that for some reason network activity spikes and their priority fee spikes up and then they aren't able to get their proofs in. So I think they'll be doing that. But As I said, most users will only need to do the comfy fee. Now, this is just a mock-up. You might be a little bit confused by this. This is definitely not something that's going into like any of the wallets or anything like that, but it's a mock-up that James Hancock came up with, who he is, I mean, he was previously the hard fork coordinator at Ethereum, and he's still heavily part of the ETH core devs and the ETH 1.x effort. So he knows what he's talking about when he's kind of like designing these things. But in saying that, good UX design is kind of like much different to this, where you basically abstract away everything. Like if you're trying to go for the best and simplest UX for gas fee, you would show people none of this information. All you would show them is that the slider and the dollar amount, or the fee in dollar amount of what they're paying, and sorry, in ETH and dollar amount of what they're paying. That's all you would show, because that's all users care about at the end of the day. And I don't know if a lot of you know this, but wallets basically do pretty much all the fee-related stuff for you already. Like, they do the fee estimation for you. You can change it, of course, but they give you, like, an estimation of what you should be paying, and they handle the setting the gas limit and things like that. So most of the I do believe most of that sort of stuff should still be handled by wallets, and all those kind of things going forward, rather than having to kind of like get users to do that, because there's no way an end user, like especially a new one, is going to look at this and think, oh, I know exactly what this means. No. Not even like not even new users, like people that have been in this space for a while aren't going to be able to look at this and understand totally what's going on. So, we just need like as simple as possible. But still, good to see these kind of mock-ups here. I think it's really cool that that James put this out. And I hope to see, I'm excited to see what wallets come up with and how they handle the new 1559 gas fee mechanisms. So Jimmy put out this tweet thread that I thought was pretty interesting today, where he was quote tweeting Daniel from Arbitrum, who said, the original tweet said, arguing about crypto is fun because we don't even agree about which properties aren't desirable. And he gives a list of properties here: high fees, MEV, ledger transparency, ASICs, efficient social coordination, toxicity, SPV, traditional finance involvement, and lending. Are they features or bugs? And then Jimmy went ahead and say that he thinks all of them are unequivocally features, and he explains why. He actually breaks down each of these and explains why. Now, I'll link this in the YouTube description. You can go check it out. But essentially, I think that, I agree with pretty much all of Jimmy's points here. And I believe that all of these things are definitely features. So high fees, for example. I mean, I've said that high fees are actually a good thing for Ethereum in the kind of the long run. I've said that pretty regularly. I'm not shy about that, and I've written about this in the newsletter plenty of times. But Jimmy says high fees are good because good luck maintaining a secure chain without an adequate security budget. When someone tells me use Chainx, it's cheap, all I hear is it's also cheap to nice hash, which is renting hash power, like proof of work hash power, and wrecked your ass, or use derivatives to cheaply hedge and attack your chain with your proof of stake. Totally. I mean, security is derived from the high fees on, and this is actually how Bitcoin plans to secure itself long term, is with a healthy fee market. So if that doesn't happen, then Bitcoin security goes down because of their dwindling block reward. And then he talks about a few other things here. ASICs, saying, anyone who says that ASICs are bad, aside from environmental reasons, doesn't understand economies of scale and doesn't appreciate the security it provides. Then he goes on to say toxicity, and this is one that actually resonates with me a lot. And he describes toxicity and says, if your community doesn't outright reject stupid proposals bogged down by the let's be nice pretext, it's only a matter of time before you let idiots walk all over you. There's a lot at stake, especially user funds. Act like it. And then he says, that being said, though, if it's anything like the toxic maximalist playbook, know that it's not only repugnant, but you're achieving none of your objectives that way, unless circle jerking or signaling to other toxic duds is all you care about in the first place. I totally agree with this. And this is actually one of the points I wanted to focus on. I think when people call, I guess like me a toxic person, or toxic for kind of rejecting a proposal or something, or going against someone saying something, I think it's coming from, an area where people think like I'm just an ETH maximalist, so to speak. I don't think it's toxic to reject bad proposals under the let's be nice pretext. as an example, and not even just proposals. I think like it's not toxic to reject communities based on these pretexts. So as an example, over the years, people have said to me and to other Ethereum kind of community members, "Oh, you're just being toxic by not embracing this new chain." It's like, well, I mean, no, because this new chain is in direct competition with Ethereum. They are not shy about that. They want to take developers and users away from Ethereum. So why would we be nice to them? Like, being nice to them just means we get walked over by everyone. So I don't think that's being toxic. I think that's just defending, Ethereum. Like, if you view Ethereum as like a company, and say you are like the kind of like executive on the executive board of that company. Well, I mean, you're not going to be incentivized to, let your competitors walk all over you. Because executives, I guess, get paid in stock options and things like that. But even beyond that, you're not incentivized to let your competitors walk all over you. So you're not going to let. Could you imagine, like, Apple's one of Apple's conferences, if Microsoft came up to them and said, "Hey guys, can we like advertise our new products on your main stage?" No, like Apple would never agree to that. And this is why, for those of you who are aware, like, DevCon in Osaka in 2019 actually had a lot of Ethereum competitors on the main stage, and the Ethereum-related talks were put into side rooms. I don't know who came up with that, but that was the stupidest thing I've ever seen. And people were calling us toxic for calling that out. Like, some of us Ethereum people. And like, how is that toxic? Why would we invite competitors onto the main stage and support that? Why would we want to support that when we know what they're there for? So I don't think that's toxic. I think that's just responding to incentives, and is a way to, I guess, like, sufficiently defend against, these, I guess you can call them attacks or whatever you want to call them. But then Jimmy says, that being said, the toxic maximalist playbook of just like doing what Bitcoin maximalists do, rejecting everything and calling everyone, a shitcoiner or a scam artist for liking something different, is very different to how I myself and a lot of other Ethereum community members approach things. I think there are, of course, lots of scams out there, but there are also a lot of genuine projects who are trying to do something, even if I think they're misguided in what they're trying to do, they're still trying to do it for good reasons. They're not trying to scam anyone. But I'm not going to still be nice to those projects and let them walk all over kind of the Ethereum ecosystem, because they are in competition. So as soon as people acknowledge that everything is in competition with everything in this ecosystem, the better off you are. And this doesn't just apply to layer 1 chains. This applies to apps as well. At the end of the day, Uniswap and SushiSwap is the perfect example here. I don't think it can get pretty toxic sometimes between the two camps I've seen on Twitter. But I think generally it just makes sense if you look at the incentives. No one, I guess, like from the SushiSwap camp or like from any of those two camps has an incentive to promote the other, because they are in direct competition for trading volumes, for fee revenue, for all that sort of stuff. But anyway, I've rambled on about this one a little bit too much here, I think. If you want to read the whole thread, I'll link it in the YouTube description and you can go check it out. So MakerDAO announced this new MakerDAO Growth Core Unit Initiative, which is a company born out of the MakerDAO community and is dedicated to the continued growth of DAI and the Maker protocol through strategic partnerships and business development. So essentially, this is their new BD marketing partnership, I guess, like business, I'm losing the word right now. Business unit, so to speak, right? It's a core unit. It's obviously going to be decentralized. It's not going to be like a traditional company or whatever. It's going to be part of the DAO. But this is really cool. I mean, this is like the working groups that the Index Corp has. Like, you guys know that I'm pretty big fan of the Index Corp, and I pay attention to what they're doing. They have a bunch of working groups, similar to what Maker has. And I think that a lot of DAOs out there are going to be doing this, where you have different working groups for marketing BD, or for, dev, or for, community related stuff. And you kind of like assign leads there, and you assign different people to work on that. And then they just basically work for the DAO. And that's essentially how a DAO kind of gets to a point where it's actually autonomous, is when you have all these working groups and these core units that basically are siloed to an extent where they focus on their own stuff, but also have like overlap with the rest of the DAO. So that's how you get to the autonomous part, because right now a lot of DAOs really are DOs. They're digital organizations, but they aren't autonomous because they have a core team that they kind of look up to and look to for guidance and follow along with. And that's usually the original core developers that launched the protocol. But to get to an actually sufficient an effective DAO, you need to create these core units and working groups, and you need to steward them along as the core team until they're sufficiently kind of like decentralized and sufficiently they're self-sustaining as well. So it's just cool to see Maker doing this. I think Maker is probably one of the most furthest along teams on this because of the fact that they've been around for quite a while, and they were the first kind of like DeFi DAO, I believe, as well. So yeah, really cool to see this out of Maker, and I'm curious to see kind of like what they do as this new core unit here. So finally, we have the Ethereum push notification service that announced today that they're collaborating with Aave to basically, I guess like I mentioned this the other day, that they were teasing that they're going to be doing push notifications on Aave, and you can read all about that in this kind of Medium post here, which of course will be linked below. But essentially, you can subscribe to decentralized push notifications using EPNS and within the Aave ecosystem. So essentially, you can subscribe to a notification that'll let you know if your position's about to be liquidated, or if an interest rate changes or goes above or beyond or below, whatever kind of parameters you set it to, and things like that, and all that sorts of stuff. So yeah, really cool to see EPNS kind of collaborating with more teams here to bring push notifications to DeFi. Because the funny thing is that you'd think push notifications would have been a thing that we've already kind of done within crypto, but it's done in a very limited fashion, right? MetaMask will give you a notification when your transaction succeeds, but it's not going to tell you anything more than that. It's not going to tell you, succeeds or fails, to be fair. It's not going to tell you when you receive funds to your MetaMask account. It's not going to tell you when your position is going to be liquidated. It's not going to tell you interest rate change. It's not going to tell you any of that sort of stuff. Whereas EPNS is planning to do that, and there are some other kind of like services out there. I think DeFi Saver, Etherscan lets you set up notifications for certain things, but it's all very primitive still. Block Native has their notification service too, but yeah, it's still very primitive. So it's still not really decentralized. So EPNS is kind of like trying to decentralize this out. They do have a token, of course, and I should mention that I'm a seed investor in EPNS as well. But yeah, they are trying to push this forward, and I think it's just a really cool idea, and excited to see them collaborate with some of the biggest projects in this space. They've also been working with Uniswap and a few other projects as well, and they're also on Polygon too, which is really cool. So yeah, if you haven't checked this out yet, be sure to do so. But that is it for today, everyone. So thank you again for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks, everyone.